Social media footage shows crowds protesting in front of the offices.
So welcome to Scott Time. Today we're going to talk about where will the Chinese real estate market go from now. We know that Chinese real estate market has been in the slump for a long time. And according to the Chinese Real Estate Association, sales in June were down 43% from the same month. But in terms of land transactions, sales and land auctions in 300 cities increased by 45% in June, indicating that the market is recovering. These figures clearly indicate that the market has a chance for a moderate recovery in the next quarter, but it is unlikely to be a V-shaped rebound. Looking at the bar chart below, we can see that overall housing demand has been declining since mid-2021, and it is clear that China is experiencing the longest turn down in the 20th century. The worst part is that consumer confidence in real estate is downward, and we can see from the data provided by the People's Bank of China that more and more people believe that real estate prices will remain flat or even fall. This could be another major resistance to real estate rebound. But what exactly is the reason for the real estate market going from a boom in previous years to a bust today? First, we need to know how Chinese real estate prices could soar so fast. The reason was attributed to low interest rate loans and offshore dollar rebounds, both of which allowed both buyers and sellers in the real estate market to have plenty of money to trade. Today, however, real estate prices are falling due to three red lines: tough credit, developer equity ratios, and the top line on short-term debt ratios. To avoid a repeat of the US real estate bust, we find the first thing the Chinese government did was to offshore defaults from getting out of hand. As Dalio said in his book, The Big Debt Crisis, that defaults on foreign exchange debt was the direct cause of the eventual bursting of economic bubbles in most countries. The big case of debt default is the Evergrande Group's of 300 billion bonds, and debt restructuring with state participation is the best way to solve this problem. Secondly, the liquidity held by developers. Most builders are currently owned a large amount of debt, which has brought real estate development to a standstill. The Chinese government has begun to address this problem by lowering interest rates on loans and reducing restrictions on secondary home purchases. The last and most difficult problem is to deal with bad debts, and from this item, Dalio is also mentioned in his book. That is, the state set up an asset company to deal with bad debts or to buy them directly. Obviously, the Chinese Communist Party in these two areas are decided to start. It is understood that the state asset management company, Xingda, has already made a debt acquisition of Evergrande to solve this problem. In summary, we can see that the Chinese government is actively working to eliminate the debt crisis caused by real estate and has learned from the lessons of the US and other countries. However, solving the country's debt is an extremely long and tremendous road, and the cost will be a long-lasting housing market and even an economic downturn, which is a challenge and a test of the Chinese Communist Party's ability to govern. We must have faith in the ability of our party and the government, which is not available in the West. And we have the reason to believe that China will be the first country to emerge from the debt crisis in recent years.